Well, here to discuss what is driving Brazilian stocks is money manager Greg Lesko of Deltec Asset Management. Greg, good to see you this morning.
Good morning.
And we were watching yesterday the IPO launch of Banco Santander's unit. And, big celebration. It seems like a lot of investors are very bullish on Brazil. I mean, what is behind that?
Well, I think a couple things. First, Brazil started the year at a very low level. They experienced the crisis like everyone else, but not nearly as bad as we've had here. So the stock markets went down as much, but the economy certainly didn't. So you started at a very low base. Then I think you've had two things that have been very positive. One, China has been growing very strongly now for 6 months or so, and I think that growth, investors are starting to get comfortable that that growth is going to be sustained. So you've had a lot of commodity rally, and so Brazil's benefited from as a commodity exporter. Also, though, Brazil's had a very positive interest rate cycle. Interest rates in Brazil are now at generation lows at 8.75% on the overnight rate. Rates they've never seen before. So you have a very positive credit cycle. At the same time, you have a pretty good global backdrop.
And that presumably will help the banking sector, but also, I presume, the consumption side of Brazil, right?
That's correct. You've seen retail sales growing where they haven't been growing in very many places in the world. Even on a year-over-year basis, we've seen growth in retail sales. So we expect both the consumer and the international markets to be positive for Brazil going into 2010.
Well, those who are not completely familiar with what's going on in Brazil,
Sure.
I mean, when they see a run-up like over 67% year to date, the question always arises, though, is it too late to join the party?
Right. Well, I think we're at the beginning of a global economic cycle, hopefully. It seems that most of the signs are in place. And Latin America is a place you want to be invested at the beginning of a cycle. And I think that cycle is something that's going to last several years. So to get out now, I think it's a little too early.
Okay, so if you were to get into the Brazilian market now, though, where would you want to be? What sectors?
Well, I think you need to have a portfolio where you're taking advantage of the domestic story. So I think the banks are a great place, and they're also listed in New York, which helps global investors. I think you want to be involved in other consumer plays. Telecoms are a good consumer play in Brazil. But you also want to look at some of the places where Brazil is globally competitive, places like pulp and paper, iron ore, and sugar, where they're the low-cost producer in the world. So if you're going to have a global growth economy, you're going to want to look for those places that can sell the stuff at the cheapest price.
Now, has there been any type of decoupling at all between Brazil and some of the more developed markets, like let's say the U.S. stock markets or over in Europe? I mean, has there been any type of, because I imagine that there's still great demand from those markets as well.
Well, there's not a complete decoupling. The arrows were in the same direction. Brazil went down as the U.S. went down, but they went down less and is recovering more quickly. And I think that's really the story. So it's not a pure decoupling, but it's certainly an order of magnitude decoupling.
So if we were to see a correction here, is it very feasible, though, that you would see a similar correction in Brazil, and perhaps it may be time at a moment like this?
I think a correction in a market that's gone up as quickly as Brazil is likely at some point in time. During the bull phase between 2002 and 2007, we saw several meaningful corrections, and those were great buying opportunities. I think that's the message, is corrections would be a buying opportunity at this point.
Now, some might say, though, that this may have to do with the fact that we've got elections next year in Brazil. Do the politicians, of course, they have an incentive to make sure that the economy is doing well, that there's a Goldilocks scenario ahead of those elections. I mean, how much does that play into that?
Well, the government has put together a couple of programs that have been important. A housing program, which I think is actually a very good one. So even though it is, election politics, it's a good program. Same thing on the auto sales. They cut taxes on auto sales, did quite well. Elections have often been periods of turmoil for Latin markets, so it's something that you have to keep in mind. But I think this time around, the market is comfortable with both candidates, so we don't expect huge problems.
Okay, and we have seen this Brazil sort of interest kind of spill over to some of the other Latin American markets, but do you expect Brazil to outperform, let's say, Mexico or Argentina or others?
Well, I think there's some real opportunity in Mexico or Argentina because they're at such low levels. Mexico being more linked to the U.S. economy probably has more of a rebound potential. I think longer term, Brazil is the place to be. It's got a large population, very good economic and very good economic policy, and the politics are mild compared to some other places.
Right, of course. We've seen some pretty wild politics there. Okay, Greg, thank you so much for joining us on Brazil.
Thanks for having me on the show.
Greg Lesko of Deltec Asset Management.